Hello, everyone. This is Juliana Danquah, broker and owner of Century 21 XSELL Realty in Worcester and Auburn. Today, our discussion again is on the benefits of buying a rental property, the tax benefits. So I have Lily Law here again. Lily, it's interesting. We're having a fun time.
Oh yeah, this is one of my favorite topics to talk about, and I am always always willing to talk about this.
Yes. So, but before we start, can you tell us a little bit about you?
Of course. Hi everyone. I am Lily Chukwurah, the principal owner at Lily Legal, where we help landlords and investors run their rentals as a business.
Awesome. So today, the topic you love the most, the tax benefits of owning your rental, buying a rental property. Yeah.
Yes. So when you are buying a rental, you may just be looking at the income that the renter is going to produce. And that's what everyone looks at the beginning, because that's what you should look at, right? What is the cash flow you can expect from the property? No one thinks about the tax benefits. So when it comes to tax time, everyone is scrambling to figure out, okay, what do I do? What documents do I need? So if you don't have that tax conversation at the beginning, when you get to tax time, you're going to delay your filing, you're going to be confused, and you're going to leave money on the table.
Okay.
So first, you need to know your entity, right? You need to make sure that you're filing the taxes correctly. That's number one. So if you own the property with someone else, you are not going to be filing the rental taxes under your personal tax return. Yeah. That's what people don't understand. They want to, collaborate and own a building together. They don't do the paperwork to make it an LLC. So now it defaults to a partnership. And if it's a partnership, you have to file a partnership return for the property. And they miss that part. Yeah.
And what are some of the record keeping to make sure that your taxes are done right?
Yes. One thing that people miss out on are the expenses, right? The little things that you don't think about. There was a leaking faucet, you went and bought a new one, and you replaced it yourself, or you had someone come in and replace it. You don't keep records of that, right? Those are repairs that reduce your rental income. So basically, if you're running it as a business, you should be looking at what are all the expenses I made that year that can reduce all this rent I received and make it as if I did not receive anything. Okay? And you need to look at your depreciation as well. So one of the great benefits of owning property, rental property, and running it as a business is the depreciation, which is basically free money. The government is calculating how much your property is going down in value because of the fact that it is 10 years old, right? You've owned it for 10 years, you're on your 10th year, it's going down in value. The government is giving you credit for that, and that reduces your income.
That's wild to me, because the government is giving you credit for depreciation, yet on the open market, if you own a 3-family for 10 years, your property has appreciated.
Exactly.
So it's a double gain for you.
Exactly. And that's why, I tell a lot of people that real estate is a long-term investment. It's not something you get into unless you're flipping, right? Unless you're flipping properties. Real estate is a long-term investment because if you get depreciation for 2 years and then you sell the rental, the government may want some of that money back. Right? But if you own it for 30 years, 40 years,
even 10,
the longer you own it, the less clawback they can do when you go to now say, hey, I sold the property. Let me not make, let me show you this is a long-term investment. I didn't make that much money off of it. And you don't need to take back any of the depreciation you gave me. So that's one thing people don't understand. It's a long-term plan. And you need to make sure that you understand the different things that go into your taxes. Because that depreciation, it's beautiful.
It
can take you from having $20,000 of rental income to having zero rental income, depending on the value of your property.
Right. So I'm thinking if you're a high earner and your taxes is high, the way to pay less is invest in rental properties, right?
Yeah.
Isn't it?
Yeah, that's one of the great ways to actually reduce your taxable income. So if you already own rentals and you're not taking advantage of the tax benefits, this is the time to do that. Because now, if you're not taking advantage of those tax benefits, you're paying extra taxes on income that you most likely would not have to pay taxes on. And
I see. Now, you guys know there's a lot of information, a lot of knowledge here. You're looking to buy a rental property, how to put it in an LLC, how to keep the right records, all that is great information. And also even how to find the best tax accountant. Reach out to us. We are here to help you. Lily is here to help you. We'll share her information at the end of the video and my information. So as always, we are here for you. Thank you.
Thank you.